If you are buying a property and you're thinking about it as an investment, you want to go where people are going to be moving and there's going to be a lot of support by families, and it's going to be very desirable for them to want to be there. And these are newer communities, so you're unlikely to experience, 50, 60-year-old home where you might actually have some more maintenance.
What should Canadians know about investing in American real estate? What sort of trends are you seeing in the market that Canadians might not be as aware of? And what sort of regulation or lack of regulation or differences is there in the process that they might not be used to?
Yeah, I think that the element of buying a home in the US where property taxes are an important consideration. I think in many countries around the world, taxes are much, much lower than what they are here on the property taxes. So when someone is buying, it's very important for them to understand what is the monthly carrying cost of these properties. And that has a factor in how they think about, what does it cost to get a mortgage? What are the rates? The rates tend to be higher here in the US than they are in potentially Canada and some of the other sort of European countries. Now, all rates are moving up in tandem around the world, but I think it's an important consideration to understand that is something that is happening. I think the other thing is mortgages in the US tend to be 30 years. That's also not the case in other markets. And I think that that's beneficial because it allows a consumer to be able to have a longer period of payback and not have a shock that they have to go out and get another loan right away. So I think that is definitely unique. And I think that the other element of what we're seeing is that many Canadians, if you would look back sort of 15 years ago, 20 years ago, they really wanted to be in South Florida, in Miami, in some of these markets. Now what we're seeing is that many Canadians are buying all across the US. They're really looking at the Sunbelt region. So that could be from Arizona, which has become very popular, Texas, and the Carolinas, where potentially some of those markets, the purchasing power will go a lot further than buying an expensive condo per se in Miami. So I think that there's a lot of places that are interesting for Canadians to buy in the US.
Yeah, I was actually going to ask about that more directly, and I'm glad you touched on it. What is sort of the landscape of investment properties in the United States? Where are some of the hot spots that you're seeing right now? You mentioned the whole Sun Belt is really up there. Are there certain pockets of the country that are a lot more popular for investment properties than others?
I think Arizona and Texas, I think that those are attractive because you are seeing this migration of people moving out of California and some of these states that have higher state taxes. So individuals are moving there. So I think that those are great opportunities for Canadians to be able to purchase properties in those markets because those are newer communities with single family homes that they're building new schools, and it's making it very desirable for people to want to locate there. So if you are buying a property and you're thinking about it as an investment, you want to go where people are going to be moving and there's going to be a lot of support by families, and it's going to be very desirable for them to want to be there. And these are newer communities, so you're unlikely to experience 50, 60-year-old home where you might actually have some more maintenance to be built into it. So definitely looking to newer communities in some of these developing markets.
So yeah, more recent infrastructure and up and coming communities are two very good principles to follow when investing across the border. Any other advice on what to look for in an investment property outside of your own country?
I think the element of also understanding, structures of mortgages. In our case, we really lean towards individuals that are buying investment properties to take out interest-only loans. The concept of amortizing loans, meaning every single month you pay interest as well as a portion towards your principal to reduce the loan balance over time. What some people forget to consider is that amortizing payment usually is 20 to 25% greater than that interest-only payment. And if you take out an interest-only mortgage where you're really looking at what is your monthly carrying cost, it really helps to bring down the cost and allows you to make principal payments when you want on your schedule, but you're not obligated to do it every single month. And since most people tend to keep homes under 5 years, you're not really amortizing much, but it does give you more financial flexibility. And today, where currencies are fluctuating all the time, that's an important thing to have that optionality from a consumer's perspective.